Steve Sasnick here with an Interactive Brokers midday market update for April 30th, 2020. Speaking to you from a very gloomy Connecticut today. Another rainy, gloomy April day, but we've actually had a very gloomy April weather-wise, but a very exciting April if you're a stock market investor. We'll see what happens as the calendar turns. But before it does so, there's certainly some stuff to be looking at today. We're down about 40 points now as we're on the S&P when I'm taping this. That's giving back, call it half of yesterday's gain, a bit more at this point, so really nothing to be too concerned about. We have a lot of stuff going on, though, tonight and into tomorrow. First of all, you've got really two of the biggest fish out there reporting earnings this evening, Amazon and Apple, both after the close. That's a huge index weight and a huge psychological weight. Amazon is rallying today into earnings. Apple's a bit more subdued. For the most part, I asked the question a little while ago, earlier this week, we'll find out if earnings really matter. So far, they have, and for the most part, we've heard pretty good things, at least in terms of beating expectations, not in terms of forward guidance, because nobody's giving you any. But markets were reasonably happy with Google beating on revenues, missing on earnings, but telling a positive story. Facebook, which had a pretty good set of numbers to report. Microsoft, where the market's a bit more subdued, just sort of meandering around. But none of these have really been enough to upset the market's momentum. That's a positive if you're an investor. We'll see what happens with Amazon and Apple. Markets are actually fairly sanguine right now about it. What I like to do before any company reports earnings, but particularly an important one, is see where the options market is pricing the earnings move. And in the world of weekly options, it's fairly easy to do. I'm going to refer you to an article that I put online earlier this week, courtesy of the Montreal Exchange, but it's a mathematical lesson that works no matter what country you're in, about the rule of 16 and how it's relatively easy in this environment for investors to basically take a look at the implied earnings move by looking at the implied volatility, and you can see that on your trader workstation, dividing that number by 16. And that will give you the implied daily volatility. I don't want to go into it too much in depth here. It's not really appropriate for a video, but it should read pretty well in writing. And so when you take that implied volatility number divided by 16, you'll see that in the case of Apple and Amazon, in Apple, we're looking for about a 4% or 4.5% move at this particular moment. In Amazon, we're looking for something closer to a 7% move, but those are actually pretty close to the historical levels that markets look for around earnings in those two names. So when you think about it, considering how crazy of a market this has been, how little transparency there is, if not necessarily in the immediate number, but going forward, that's a fairly sanguine market. The other thing that I'm looking at is, and this is impossible really to quantify until after it happens, is how much of what we've seen rallying through April is really the market setting itself up to for investors to sort of say, oh, look, we're invested in all the right names in April. I think there was a lot of catch up. I called a piece the other day, full on FOMO, where I really do think there's a lot of fear of missing out among institutional investors. And we get to start to see as we turn the calendar, do we start to hear the phrase sell in May and go away? I've always been a bit skeptical about that because the questions are typically sell to whom and where are you going to in this environment? Where are you going to? There's nowhere to go, really. And I don't mean that necessarily in a physical sense, but also in terms of where do you go, you have to think about what are your alternative investments. And a lot of people are reluctant to hold cash and fixed income because interest rates are so low. One of the advantages of holding stocks is you do get a dividend, although those dividend rates have come down considerably. But these are the type of things that we'll have to resolve over the coming sessions. In the short term, though, we've got the calendar turning. We've got two big names reporting earnings tonight. We've got relatively normal expectations around earnings volatility for them, and that could pose some interesting moves as we head into tomorrow and the end of the week and the beginning of a new month. Take care, everybody. Bye-bye.